Day trading. The term itself conjures images of someone in a sleek home office, clicking a few buttons on a laptop, and watching money pour into their bank account. It's sold as the ultimate financial freedom, a way to escape the 9-to-5 grind and become your own boss. The internet is, honestly, just flooded with slick advertisements and gurus on social media showcasing lavish lifestyles, sports cars, exotic vacations, designer clothes, all supposedly funded by buying and selling stocks within a single day. If you're finding this video helpful so far, don't forget to like and subscribe for more insights on finance and trading. They make it look so effortless, so achievable, that it's easy to see why millions are drawn to its siren song. But tonight, we're going out front with the reality behind the hype. What is day trading really? At its core, it's the practice of buying and selling financial instruments, like stocks, within the same trading day. The first and most sobering truth you need to confront is this: the vast majority of people who attempt day trading fail. This isn't an opinion, it's a fact backed by numerous academic and regulatory studies over decades. While exact figures vary, they all paint a grim picture. Studies show over 90%, sometimes as high as 97%, of day traders lose money over time. Imagine a stadium filled with 100 aspiring day traders. After 1 year, 90 of them will have less money than they started with. Of the remaining 10, maybe 9 will have broken even or made a tiny, insignificant profit. That leaves just one person, one single individual, who might be making a reliable income from their efforts. The traders you see flaunting success are the rare exceptions, not the rule. Your chances of success are statistically lower than in many other high-risk ventures. Acknowledging the high failure rate isn't to crush dreams, it's to force hard questions. Am I prepared? Do I have capital I can afford to lose? Am I willing to accept the odds? The second brutal truth is successful trading has less to do with genius-level analysis and more to do with mastering your own emotions. Your biggest enemy in the market isn't a sudden crash, a bad tip. It's the person staring back at you in the mirror. The two most powerful emotions in finance, fear and greed, will wage a constant war inside your mind. Think of it like being a bomb disposal expert. A successful expert needs a steady hand, a clear head, and an unwavering adherence to procedure. You must execute your predefined plan with cold, robotic discipline. This brings us to a pervasive myth that you can trade on gut instinct. Many beginners believe they have a special intuition, and they might get lucky a few times. But relying on gut feelings is a recipe for disaster. It leads to impulsive trades, revenge trading, and a complete breakdown of discipline. The third brutal truth: your profits are under constant attack from a swarm of hidden and not-so-hidden costs. The most obvious costs are commissions and fees. Commission-free advertising can be misleading. Brokers still make money through the bid-ask spread. You buy at the ask, sell at the bid, starting every trade with a tiny loss. Trade frequently, and those tiny losses add up fast. Think of it like paying a toll every time you enter and exit the highway. Add high-speed internet, professional software, subscriptions, then taxes. Short-term gains taxed as ordinary income in the US can take a big bite out of profits. All these costs create a high hurdle to break even. Commission-free, cost-free. Factor them in, and your winners may be losers in disguise. The fourth brutal truth is that successful day trading is an all-consuming profession, not a casual hobby or side hustle. The fantasy of trading from the beach on your phone for an hour a day is just that, a fantasy. Serious day traders are glued to screens from before the market opens until after it closes. Imagine being an air traffic controller. You need intense focus, fast information processing, and vigilance for the whole shift. You are constantly monitoring multiple charts, tracking news feeds, and managing open positions. It is mentally exhausting and needs undivided attention. If you won't commit 40 to 60 hours a week of focused effort, you're gambling, not trading. Trying to do it around a day job is a recipe for failure. Traders spend evenings reviewing winners and losers, refining strategies, backtesting ideas. It's a full-time job, and then some. The fifth brutal truth is that when you day trade, you are not playing on a level field. You are a small retail trader stepping into an arena dominated by two formidable opponents: institutional whales, hedge funds, investment banks, pension funds. They move massive amounts of capital and can influence prices in ways you cannot. A single large order can instantly move a stock's price, triggering your stop loss before you can react. Then there are high-frequency trading firms with supercomputers and algorithms executing millions of trades in fractions of a second. They co-locate servers near exchanges for microsecond advantages. They can react faster than your screen refresh. Thinking you can outsmart billion-dollar algorithms with a moving average crossover is naive. You're bringing a knife to a drone fight. Understand who you face. Chart patterns and indicators help, but they are a very small part of the picture. Humility, adaptation, and a toolbox of strategies are essential. A sixth brutal truth that trips up many traders is the simple but profound disclaimer you see everywhere in finance. Past performance is not indicative of future results. A strategy that worked last week, last month, or last year can suddenly stop working tomorrow. The market is a dynamic, adaptive ecosystem. Market regimes shift. Trending versus choppy markets require different tools. This kills the myth of the Holy Grail strategy. If a perfect strategy goes mainstream, it stops working as participants adapt and erase the edge. Successful traders carry a toolbox of strategies, constantly test and discard what no longer works, and adapt to the market's character. The final and perhaps most personal brutal truth is the immense and often underestimated psychological toll that day trading takes on a person. The constant stress of managing risk, the emotional highs of a winning streak, and the crushing lows of a losing streak can lead to anxiety, decision fatigue, sleep disturbances, and social isolation. Think of it as living your life on a tightrope. Every step is a high-stakes decision. As your account grows, so does the pressure. A 1% loss on a large account suddenly becomes life-changing money. It can strain relationships, impact health, and consume your life. Acknowledging these truths isn't discouraging ambition. It's protecting capital and well-being. For most, a balanced path like long-term investing is wiser. Close the laptop, go outside, and keep perspective. If you found this video helpful, please like, subscribe, and share for more insights. Let us know your thoughts in the comments below.